So we have a meeting that is scheduled. Updates coming in, a meeting between Marco Rubio as well as Dr. S. Jaishankar has been scheduled for Tuesday. This follows the recent trade deal that has been announced by the President and the Prime Minister. So a meeting expected. Remember, Jaishankar was also in the United States. Ambassador Sajanar, we saw how multiple rounds of meetings have taken place. But Ambassador, I want to ask you, what do you think really happened? Because there were talks going on for a long time. There were indications that things were not going as planned. And suddenly, now we have a deal that is sealed. We don't have the contours or the details of the deal yet, but both the leaders of the country confirming that the deal has been achieved.
Yes, thank you very much, Pratibha, for having me. You're very right. I think what is really the highlight of the announcement that has been made by the two leaders is that the tariffs have been reduced from 50% to 18%. I think that is what has sent the cheer in the markets, as Hina has been speaking, and she said, that the Sensex is up 3,600 and Nifty is above 26,500, and even the rupee, as far as the rupee is concerned, the depreciation has been arrested. So that is very good news and brings very welcome cheer as far as the markets are concerned. And I'm sure as far as the people and the exporters, because India exports about $86 billion worth of goods to the United States. Out of that, about $45 billion were under tariffs, and basically those goods which were more labor intensive, whether it is textiles, it is garments, it is leather, it is footwear, it is marine products, shrimps, gems and jewelry. So all these items, which are basically labor intensive, they had been put. So in terms of not only the big numbers, the highlight of numbers in terms of the impact on exports from India, but also in terms of the employment, the livelihoods of people who are getting impacted. So this is going to send a cheer not only as far as the exporters are concerned, but down below, to people in Surat, to people in Tirupur, and to the coastal regions of Kerala, that, their livelihoods, etc., yes, which had been under attack, that they would be also be protected. I think the second aspect that you mentioned is how was the trade deal reached? I think the trade deal, in my view, has been ready since the first week of July last year. It's been lying on the table of Mr. Trump. And Mr. Trump, for his own reasons, and we can go into those reasons, whether it is the fact that India did not give him credit for the India-Pakistan, cessation of hostilities, and also the fact that, he'd become used to getting unilateral agreements from all countries.
Yes.
And as far as India is concerned, India was not prepared to do that.
Yes.
It wanted a win-win deal. It did not want a zero-sum game,
yes,
as far as the United States is concerned. And that is what stuck the deal.
Yes.
But now the realization is formed.
In fact, it's been a very long-drawn negotiation that has gone on with the United States, and it looks like it all worked out in India's favor, or a win-win deal, as you're calling it. But Dr. P.K. Basu, I want to ask you, the details of the deal are still awaited, and there were some red lines that India had made very clear to the United States. What happens to those red lines, including in agriculture, dairy products as well, and on the question of stopping the Russian oil purchase completely, the imports completely? Is that practical? Is that going to happen?
The actual details are not yet out. And as of December, data suggests that about 38% of Russia's oil exports were coming to India. That is much lower than the 47% going to China, but we were still the second largest importer of Russian oil. So Russian oil is obviously one aspect that needs to be addressed. And one of the things there is that there are already the two largest exporters, Lukoil and Rosneft, are already sanctioned, so we are not buying from them. Nobody, we are, our oil companies are quite clear that they will not buy from sanctioned entities. With regard to the rest of the oil that is being purchased, it is being purchased from other sources, not from Rosneft and Lukoil. But we are doing a substantial amount still. So if that is really going to be cut to zero, we need alternatives. And the US is saying that the alternative is
Venezuelan oil. That is what is being claimed by Trump, that there could be Venezuelan oil, but that comes with its own set of challenges, isn't it?
Yeah, I mean, basically Venezuela has limited oil to sell at the moment. In order for that to really ramp up, there's probably a need for more capital to be flowing to to PDVSA and the rest of the oil industry in Venezuela. So the alternative, of course, the US. The US itself has a lot of oil to sell, and we'll probably buy a lot more crude from the US. We'll process it and send it back, because we are a highly competitive, our refineries are among the most competitive in the world. Rosneft is reducing its stake in Nara Energy, and those two in particular are, Reliance and Nara are major refiners of crude, and they will probably be exporting some of their product back to the US. So it is worth looking at the fine print once it comes out. At the moment, we just have the tweets, which don't mention substantial detail. There is a disjunction between what President Trump's tweet talked about and what Prime Minister Modi said. Prime Minister Modi did not mention anything about Russian oil.
Yes.
He did not mention anything about agriculture and dairy, and nor did Trump, to be fair. But what are these massive imports from the US that India has committed to? We need to look at the fine print to determine what that is.
Okay, all right. To stay with us just a moment, I want to introduce Mr. Sharad Kohli, also joining us on the broadcast, and we're seeing a complete cheer, over 3,000 points up in the pre-market. Is this on expected lines, and is this what we can expect in the markets today with the India-US deal signed?
Good morning, Amita, to you and Times Now viewers. Yes, I think the euphoria building after the trade deal had to show up in the market. Undoubtedly, it was stuck for such a long time. The market was waiting for this trigger. Even after the budget, the market could not lift the sentiment because of the STT. I think this has served as a kind of fuel for the market to move to the next level. We saw 26,328 as the highest Nifty level. And although it's a bit early to say because we are in early morning trading hours, so things might settle down because as the nitty-gritties or the finer details of the deals come, because there is also a talk on the Venezuelan oil, there is a talk on the Russian oil, there is a talk about that India is going to buy $500 billion worth of goods at zero tariff. So I think we need to, as a market, absorb the impact and study the impact. The market always reacts like a baby. It will immediately react, and then gradually as things sink into the market, market operators, investors, traders, you find that rationality prevails. So I hope the market takes the deal very well. And as the fine print arrives, I think you will see the market settling down around the fundamentals of it.
Okay, but is it going to be sustained? Is it going to continue for a longer time? What do you think? You said, markets react like a baby, and it takes some time to really see what the actual sentiment is. But considering that US is India's biggest trading partner, is this a sentiment that is going to continue for a while in the markets?
Well, hopefully, yes, because the market reacts both ways. We must keep in mind, like what happened on the budget day. Because of the STT, the market fell drastically, and then the following day, which is yesterday, the market recovered somewhat. So I think a similar thing is going to be happen. First positive and a little bit of settling down. I mean, if the impact of the deal on the economy is felt as sustainable, long-term, and as the exporters especially, when they study the impact, there are a lot of companies listed on the stock market which are huge exporters of textiles, leather, footwear, pharmaceutical products, chemicals, engineering goods, electronics. So I think the impact on each sector will be studied as the day progresses, or shall I say as the days progress. And you will find market, yes, but overall, to answer your question in very brief, yes, this will have a very positive impact on the market. India is expanding its trade network. We've seen deal after deal after the mother of all deals happened, that was seen as an alternate to America. Now it's, I think, as they say in Hindi, so nite suhaga, that after one deal, if this happens, I think it's a bonanza for the country, which will boost manufacturing and international trade, Amita.
Okay, all right. Thank you for speaking to us. In fact, there are many sectors that will be the beneficiaries of this India-US deals, including the textiles and apparel, pharmaceuticals, gems and jewelry, as well as steel, chemicals and engineering goods. Details of this deal still awaited. But look at the markets in complete green, big cheer in the markets, and this is after the India-US deal has been sealed. Both the leaders, the US President Donald Trump as well as the Prime Minister, taking to social media to confirm that a deal with the United States has been sealed. Now, it has, of course, triggered a big relief rally. It is seen in the markets, as you're seeing, green all around. Let's get you the details as well. In fact, as the markets open, they're on fire. Nifty opening 700 points up. We have Nifty at 25,780. So it is hitting a fresh all-time peak. It has, in fact, breached the 25,700 mark as well. And this is the pre-market indicator that had come in as well, that saw a staggering surge of close to 800 to 1,000 points initially. So rupee as well, strengthening significantly, appreciating over 1% to trade near 90.42% against the US dollar. So there is a lot of cheer that is happening at the markets as well, and it is expected to continue. In fact, many experts believe that this will continue for a while as well. Dr. P.K. Basu, all right, before I come to you, all right. Dr. P.K. Basu, the indications in the markets as well, whether it is going to be long-term or not, clear indications coming in that it will be. But what do you think are the challenges that remain?
Well, the fine print has a lot of challenges. I mean, we need to see what sorts of agriculture and dairy products India has agreed to import. If you look at what the US wants to export to the world, it is primarily farm products, agriculture. The other aspect that it can do is crude oil. I mean, perhaps India has agreed to a massive increase in purchases of crude oil from the US, which I don't think is such a bad thing. US crude oil will be only marginally more expensive than what we were getting at discounted rates from Russia. And the Russian crude was available at discounted rates primarily because the world wanted somebody to buy Russia's oil and keep oil prices down. So if we shift away from Russia, then there'll generally be a slight increase in crude oil prices for the world, including for us. But that's not disastrous. In exchange, we get substantially better terms for our exports to the US. Compared to China, our tariff rates are about half of what China is going to be paying. And that is going to be a big advantage for our textile, garments, shoes, toys, especially because that dovetails beautifully with the new labor codes that have just been put in place. So we should expect to see that with the India-EU FTA and now this deal with the US, that India's labor-intensive exports will really get a massive boost, and that sector is going to start seeing substantial amounts of new investment, initially aimed at taking advantage of the zero tariffs in the European Union.
Okay.
But with the expansion of scale, we'll probably see some of that going to the US as well, because it'll be much more competitive than Bangladesh, Vietnam, and especially China.
As we just put out the numbers, India has the lowest tariff among the countries in the region. Do stay with us. We have my colleague Shesha from ET now joining us on the broadcast. And, which are the sectors that are cheering? The market's clearly on fire after the India-US deal.
Well, yes, big relief coming in for Indian equity markets. And remember, Indian equity markets have been nervous for the last several months, ever since 50% tariffs were slapped by US President Donald Trump and US administration on India. So clearly big relief coming in, and as you just mentioned, Nifty is up nearly 750 odd points today, near that 25,800 mark. But yes, we are still off nearly 600 points from all-time high. Perhaps we could breach them in the near future, but for now big relief coming in for the Indian markets. In terms of big sectors that are reacting, let's put the spotlight on textile, because one such sector which was impacted on account of US tariffs was textiles. So something like KPR Mills, Vaibhav Global, Gokuldas Exports, all of these stocks are locked in upper circuit of 20% on the back of this big announcement that came in overnight. Apart from that, gems and jewelry is another sector. Of course, we don't have as many listed players, but for the unorganized market, again, this is another positive for on account of India-US FTA. Autos, chemical, indirect benefit to IT services. These are some of the other sectors which are positively reacting. But yes, a big headwind for the Indian equity markets is now out of the way, and that is the reason we are rejoicing. Nifty now up nearly 700 to 800 points as we speak.
Are we seeing similar cheer in the IT sector as well? Because what has been spoken about is also non-tariff barriers. We don't know yet the details of it, but there are indications that, amid a lot of concerns over H-1B visas as well, is the IT sector also now celebrating?
We are just seeing sentimental impact on the IT sector, because remember, these tariffs were only on goods, so services clearly were not impacted on account of these. But yes, sentimentally positive for the entire market and for IT sector in particular.
Okay, all right. Thank you for joining us on the broadcast. We keep a track of what's happening in the markets as well as markets continue to cheer. But Ambassador, I want to ask you on the questions of the non-trade barrier as well, that had non-tariff barriers as well, that has been mentioned. What is a possibility? Because over the last few weeks and months, even as negotiations were going on with the United States, there have been many ups and downs that have been seen, particularly in the IT sector, particularly with the H-1B visas as well. So what are the aspects that need to be looked at as we get the details of the deal?
As far as the non-tariff barriers are concerned, I'm sure discussions will commence, and we will try to take it forward. No forward movement was visible over the last 6-8 months, basically because, from the American side, whether it was the Commerce Secretary, we saw the sort of statements that were emanating out of him, or it was the Chief of Trade Policy in the White House, Peter Navarro, or the Treasury Secretary, Scott Bessent. So there was no great interest in moving forward on this, because everyone knew that all the papers were lying on Mr. Trump's table. Until there was movement there, they would not really be able to speak about anything else. But now that that has been cleared, I think there would be possibilities of having discussions on the non-tariff barriers to Indian exports, whether it is in terms of standards or in the area of regulations or services, etc. I think there will be a positivity there. And I think there is also this feeling, one of the reasons why Mr. Trump has thought it fit to come on board with the deal right now is both in terms of the realization that India will not be in a position to offer more, whether it is in the area of agriculture, what are our red line areas, GMOs, and so on and so forth. And the other is the fact that India was able to conclude the India-EU deal. Of course, India has been able to conclude many other deals over the last 1 year or so, whether it's with the UK, New Zealand, EFTA, etc., Oman, and so on and so forth. But I think it was the finalization of the India-EU deal that must have come as a rude awakening as far as US is concerned. And so I'm sure they don't want to miss out on all the action as far as the Indian market is concerned. It's a big market, potentially, very large market, much more than the $4+ trillion that it is. So, and it is fastest growing major economy. So they don't want to miss out on the action, let go of it. So I think there'll be much more conducive to having, discussing all these issues and coming to a solution that is beneficial to both sides.
Okay, all right. Beneficial to both sides. The US has lowered the tariff to 18% while also saying that tariff on the US products will be at zero, that it has been reduced to zero. There is, of course, a lot of politics around it, but we don't want to get into that at the moment as we look at the final details of it. Dr. Basu, I want to ask you, this confirmation from the Indian side has not come in yet, but US or Trump goes on to say that while it is 18% for India, it is zero for the US products. Is it a fair deal? Or, as Trump has been saying, is this the art of the deal for the US, in which India has also managed a low tariff?
Well, you see, now, this is a protectionist administration. The United States, since the Second World War, has basically been steadily reducing its tariffs in conjunction with the rest of the world. It was called the GATT and then the WTO arrangements were aimed at steady reductions in tariffs on manufactured goods. Under Trump, the opposite is the case. They have raised tariffs on everybody, including on countries that have bilateral trade deficits with the US. So the UK and Singapore, for instance, they export they export less to the US than they import from the US. So despite that, they've been charged a minimum tariff of 10%. So India still has a substantial trade surplus with the US, and despite that, we are being charged lower tariffs than many of our competitor countries. So it is a win in that sense. It is not a win in the absolute sense, because we are probably going to be lowering our tariffs much more than the US will lower them, and that will have some benefits for the US economy. It'll probably help to reduce the bilateral trade surplus that India has with the US, which is no bad thing. I think if it comes down from $45 billion bilateral trade surplus to, say, 30 or 25 billion, it's not such a bad deal, because the US market remains the largest in the world for imports, and we will get to penetrate that market again. And in particular, I think things like auto components, for instance, will benefit, but so will things like textiles, garments, shoes, toys, and of course gems and jewelry. Although there's a structural shift away from gems and jewelry to artificial gems, etc. But the point is that these were areas that were suffering somewhat from the tough tariff barriers put in place by the US since the end of August. They were tough, but India had responded by allowing some depreciation of the rupee, and that had ensured that there wasn't really a precipitous decline in exports, even to the US. Overall, exports in the latest quarter were up 3%, more than 3.1% in the latest quarter, October to December, despite those high US tariffs. That just underlines the fact that India has become a rather competitive exporter, and several of our key exports to the US were not being tariffed by those amounts, and those included pharmaceuticals and Apple iPhones. At the moment, all iPhones sold in the US are made in India. That's a remarkable shift. And the share of iPhones made in India is likely to be around 25% this year. About 1/4 of all iPhones in the world will be made in India. That's a massive and very rapid ramp up that has happened over the last 2 or 3 years. And Samsung and others are also producing smartphones for export from India. So we have an electronic component sector that is gaining anyway, and now will gain further in the US market.
Okay, there have been many contributors towards, of course, ensuring this deal. We also had, of course, the EU Pact. What are the implications of that? Two of the biggest trading partners. We'll speak about that. Before that, some breaking updates now coming in.